Hi everyone, Jack Duval here. Got a video to go with a new post from the Tarot FSO Substack. You can find that at Tarot, TAROTFSO .substack.com. This is a free post, so anybody can look at it that wants to. So I'm looking at declining Bitcoin volatility today. Now, Bitcoin is one of the most volatile assets in the history of mankind. However, that volatility has been declining, and that's what I want to talk about today. So here's a chart looking at the log Bitcoin price in the top pane here. That's from way back in 2012. And then below it, this blue line is the volatility, the 20-week volatility, I should say. This is a weekly price chart, and this is the weekly volatility, historical volatility. Over the same time period. Now I've looked at three distinct periods, and I'm just going peak to peak from 14 to 18, then 18 to 22, and 22 to today. Now what you'll see is that peak to peak from 14 to 18, volatility declined by 37%. From 18 to 22, volatility declined by another 25%. And then from 2022 to today, volatility declined by 38%. And this should say 2022 here. That's a mistake. Anyway, very interesting. You can see this step function down of volatility. Now, that's not the whole story, though. So I looked at another chart of Bitcoin max drawdowns. And what you'll see is that, again, this is the log chart. This one goes all the way back to 2010. This is the log Bitcoin price, and then below it we got the max drawdown from the previous high. And what you'll see is in these four cycles, you've had like 82 to 80% drawdowns, and then in the most recent one it was just 75%. Cold comfort to anybody who was down 75 if you were to tell them to be happy it wasn't 82. So basically the drawdowns are the same, but the volatility along the way within each cycle is lower. So the short-term volatility is lower. Now that, again, is cold comfort. You know, statistically, if you had an investment that went down 10% every month and you were looking at monthly volatility, it would be zero. So you'd have a volatility of zero, but the investment would go to zero, or at least asymptotically approach it. So grain of salt with volatility. But so what does all this mean? That's the key question here. I think it means that a couple of things. Number one, I think the lower volatility, just the trend of lower volatility over Bitcoin's history shows that the market is maturing. We've got more institutional participants now. We've got greater market depth. When things sell off, these buyers step in. When things get frothy, these institutions step in to sell. That reduces volatility. And then I think going forward, this is my speculation, but I think that you'll see that the upside will be less and the downside will be less. Now, of course, when people say volatility, they're just focusing on the downside volatility, but it's the same in either direction. So, you know, maybe the bottom of the cycle and the next cycle is like down 50% or something, 50, 60, maybe not 80 or 75. Now, if I'm right on that, that means Bitcoin tops out at 150 or so this cycle, and not maybe the 300,000 that you would project from past cycles. And maybe that's a fair trade. Maybe it's worth it to get a lower return, to have lower volatility, as compared to a higher return and higher volatility. Remember, most people can't stomach a 80+% decline. They'll sell somewhere, as it approaches probably 50% decline. And then they'll miss, some of the decline, but then they miss a lot of the upside. But people just can't do that. You have to have a kind of religious uh, belief in Bitcoin to do that. And if you got that, that's great. There's nothing wrong with it. Anyway, this is food for thought. I hope it's interesting and helpful.